Hey everyone, this is Ayman and today we are back with a new video for the stock trading simulator. Today I'm going to be talking about an opportunity I missed yesterday on X. This week has actually been good in comparison to the last week. A lot of opportunities, a lot of good trades, not only pinpoints, also breakouts, trend continuations. So in my personal opinion, this week was really good for trading. I hope you all had great opportunities and have caught some great moves. So today I'm going to be talking about X, why it was good to trade on 10th of March. I think it was 10th of March. Yeah, it was 10th of March. And how we could have played X on that particular day. First thing that you could see that on the daily chart, X has been holding in this topping phase around here, or in this range around here between 2750, or you could call it 2620, whatever you want to call it, or see, or however you want to see the range. Above 26 you have room all the way to 28. Above 2840 it's the best because it's at all-time high and there is so much room to go to the upside. Anyway, you could see that we're stuck in this range for somewhere around 3 months, and then finally we're getting some momentum and we're breaking above this range. So now we're moving from a topping phase where the stock is just topping and chopping around in range into an advancing phase where the stock starts the trend. Here you could see that the stock starting to trend at all-time high. That is beautiful. So many days in a row you're having a shooting star at the high. Some people might say, oh, a shooting star, that's a reversal indicator, we might drop all the way down, when that's not true, right? A reversal candle tells us that there could be a reversal, there could be a pullback, one of the two. Which one? You need to take a look at the overall price action, at the bigger picture, and then ask yourself, will this shooting star actually get us all the way back down, or this shooting star will get us a pullback? And seeing that we broke all-time high level and we did a huge move around here, I know that this shooting star is telling us that we're more likely to be making a pullback before a continuation. At the bottom, the 9 moving average on the 5-minute chart, you see that we are having a bullish candle which is engulfing the previous bearish candlestick pattern. That tells us that the continuation is about to happen. And then on the 60-minute chart, you could see that there is a range formed. That is the low of the range. That is the high of the range, approximately, right? Few wicks around there, but it's okay. I can see that this is more clear than using this around here. Eventually, it comes to your discretion and your decision based on what you see on the price. Anyway, I can see that there is a huge move around here. Then we are holding a channel. So for me, I know that I could play it in two ways. The first way is to play it around 30-50, which is the best. When it gets closer to it, holds the support and then play it for the long, because you'll get a huge move to the upside. The other way to play it is at the breakout to the upside. Now let's go to the smaller time frames and see what happened. I'll straight forward to 940 or so, because at the open it was not ready for a breakout, and I'll tell you why it wasn't ready for the breakout. One of the rules that I have when I'm trading is I do not play stock on the third 5-minute candle. So you could see that this is the first 5-minute candle in the pre-market, second 5-minute candle, and then we're breaking somewhere at the highs of the second or at the third 5-minute candle, and that's already a huge move. And if you're playing it to the long side at the breakout area, which is the level we marked around here, you will need to have a really wide stop on this one, somewhere around 70 cent stop loss. 70 cent stop loss on a stock like X that doesn't have a really huge ATR is not the best decision to do. So personally, I would avoid playing it. Then what do? We see that they raise our 30-50 level, right, which is the pre-market low. Did I mark the wrong level? No, I didn't mark. This is the pre-market low. I didn't see this actually in the live price action. I think this is the pre-market low level. But anyway, you can see that somewhere around the 30-50 level is the level that we're interested in playing. So let's play it at 10 times speed. You can see that there is a hammer. The hammer is showing you that there is some buying pressure. Every time it gets closer to the low, it gets bought back up. So you could play it to the long side. And where would you put your stop loss? Definitely not below the previous candle. Definitely not below this level. You will use the level that we have marked, right? The pre-market low as a stop. Now that you are in it, all you need to do is just hold on to your potential risk to reward or getting stopped out. Now, this is the first 5-minute candle around here. So what you could do actually when playing these is you could always add to your position after the breakout just to maximize the profit. But similar to what I told you around here, 1, 2, 3, and usually after 3 candles you have a pullback, right? So this is 1, and this is the second candle right now. I'll not add on the second candle or at the end of the second candle. I'll also not add on the third candle if we break up. But what you could do is, if you have a bull flag, or if you have an ABCD pattern, like move up, a pull back, and then a new high, you could add and you could move your stop loss. Now this is the third 5-minute candle, and because it's the third 5-minute candle, there is no reason to add around here. You can add if you want, but you'll need to really have a wide stop loss way down there. I personally would prefer just holding. Another way to do this actually is, because it's the third candle and you know that after 3 consecutive candles there could be a pullback, you could just take partial. 1, 2, 3, okay, there is a partial. Now I'll wait for a pullback, and after the pullback, whatever I have realized, which is 30 bucks for example, I would risk just to make even bigger profits if it continues going higher. Now, what is your final target? Your final target is the average true range. Check what is the average true range for X, for example. You could see that maybe it is somewhere around $3, $2.50. I don't really remember exactly how much. Let's say it's $2. If it's $2, you know that your final target would be sitting at around 32.60. It didn't hit 32.60 yet. There is still room into 32.60, so I will wait for a pullback. I will add to my position, and then I will hold my remaining position all the way to 32.60. Now what we're doing is we're waiting for a pullback. Is there a pullback? There is a small, but it's not worth it. Now that is a pullback. Good. We're having a new 5-minute low. That's amazing. Now I'm interested in adding. Let's see when if the stock is going to give us an opportunity to add into the position. So it's still pulling back, it's still dropping down. You don't want to add on the way down. Why is that? Because it could continue waving down and drop down. You need to wait for a confirmation. And the least confirmation, or the least thing you could wait for, is at least a new 5-minute high, right? See, lower lows and lower highs, lower lows and lower highs. You had a doji around here. Maybe you would have added around there, moved your stop loss, but you would have definitely been stopped out somewhere around here, right? That is definitely not a good confirmation to add. You would add here a new 1-minute high, and then you will get stopped out. So you need a new 5-minute high as confirmation that the stock is going to continue, and that is it. New 5-minute high after the pullback, beautiful. Or what you could do is wait for some part of engulfing, wait for it to go down, just so that you don't have a wide stop loss, and then add to your position. Like for example, there it's dropping down, you add to your position. And what would be your stop loss? I personally use the wicks as my stop. You could also use the low of this week. Sorry, the bodies, like the level that's been holding. There is a level here, level here, level here, level here. It's just enough obvious, so you could use that as a stop. If you want to play it safer, you could use the low as your new stop loss. And after that, just hold it for your potential risk to reward. I hope you guys enjoyed this. If you have any questions, feel free to type them down in the comment section. If you have any suggestions for the stock trading simulator, also feel free to add in the comment section, or email me ayman@beerbulltraders.com, or megan@beerbulltraders.com, or team@stocktradingsimulator.com. I hope you enjoyed this video. Have a great day everyone, and bye.